Good day, my name is Mike Seeger. I'm a mining engineer. I've been involved in the mining industry since the early 1990s in gold, base metals, coal, titanium, in a production capacity, developing mines and financing of mining projects. I wrote a book called Mining Capital. Why? It was for my purpose that I had a handbook so that I know when I need to finance mining projects, what I need to do. GRB asked me to present this book, and I look forward to presenting the key ingredients to you as an audience at the African Mining Summit 2020. I hope you enjoy it, and here we go. The book has 5 parts to it. Part 1, mining capital characteristics. Part 2, the mining business case. Part 3, marketing the mining business case to financiers. Part 4, raising mining capital. And Part 5, mining capital case studies. Part 1, mining capital characteristics. It's all about what do we need mining capital for, and what are the current dynamics in the mining capital industry, the industry that provides capital for mining projects. Mining capital is required for exploration projects. It's required for feasibility studies and mine design. It's required for mine construction activities. It's required for mining equipment, underground, open cast, mineral processing plants, power plants, and it's required for recapitalization of old mines that require new machinery and new equipment. If you had to sum up the mining capital industry dynamics, there would be many, and I'm going to just refer to a few that are relevant, most relevant. So one being fluctuating commodity prices, host government pressures, mineral reserve depreciation, quality projects are harder to find, lack of technical skills, disruptive digital technology. Mining has become less than 1% of global investments, historic exploration cut, a capital demand that outstrips supply, share price growth and declines, money sitting with commodity traders. It's easier for producers to raise capital, then looking at new ways of financing such as crowdfunding, collaboration, modern modular technologies making it easier for mineral processing activities, smaller budgets versus large projects, and then coal being very difficult to finance. In the second chapter of the book, I discuss the process of developing a mining business case for investments. And in this chapter, I cover the following aspects. The mining business case is the essential part, document, structure that any mine developer needs to have in place in order to attract capital. So the mining business case starts with the customer in mind, the customer that will buy the mineral product. Working backwards to the other end, you have got resources and reserves. So resources and reserves are mined by a process of open cast or underground mining to produce run of mine that is processed via a mineral processing plant to produce mineral products that are then transported to the customer via a logistics chain. Overriding this is a project mission. How many million tons or ounces do we have to produce by what date? In support of a strong business case, we have got licenses and host country dynamics, a strong mining team. Only a strong mining team will make this business case work. The legal structure, exploration results, targets, a mine plan, long, medium and short term, a process plant design, The mine infrastructure design, which entails civils, water, power, roads. Then contractors and operators, types of contracts. The offtake agreement with offtakers. The logistics path, detailed in terms of road, rail, plane, ship. The environmental management plan, the social plan, i.e. community buy-in, a project plan, and then it's all summarized into an economic model with cash flows, NPVs and IRR. Let me talk about three very significant contributors to be able to finance mining projects. One is to have a very strong team. You need to have an experienced team that has done the job before, that understands geology, mining, processing, infrastructure, community relations, host country dynamics, finance, financial matters, accounting, cost controllers. These are very important members of your team, because without a strong team, you will not be able to raise mining capital. The second criteria is to structure the mining project legally correct, with a SPV, special purpose vehicle, that holds the mining license or the prospecting right. In turn, the SPV is owned by a holdco company above which shareholders sit. The structure needs to be simple so as to attract investors. Complicated structures make it very difficult for investors to invest in mining projects. And lastly, and very important, is environmental and social sustainability. You need community buy-in, you need to be responsible for the environment, and without that you will not attract investment. So these are very important criteria, extremely important to mine developers. The third chapter of the book deals with marketing the mining business case. You need to be able to sell the investment proposition to the investor. So I deal with the following elements. I deal with the mining investor presentation and the mining investor business plan. So let me take you through the steps to get an understanding of what is integral to attract investors. A good investor presentation that attracts the attention of an investor needs to cover the following in a simplistic manner. And I'm going to show you slides that cover the essence. Have a look at them. I hope they give you a guidance. So what do we need? We need a project summary outlining in 10 bullets this main summary of the project and the investment opportunity. An overview of the location of the project, the ownership structure in terms of SPV and shareholders, the licenses that are in place and need to be secured, the leadership, who are the people, the names, qualifications, a short synopsis, a summary page on geology and exploration, a summary on resources and reserves, who is the competent person, the development strategy in terms of phases 1, 2 and 3, mining, which is the mining method, the production rate, the life of mine, and is it a contractor operation or not, mineral processing, the circuits, recoveries, tons input, the mine infrastructure, the market, the product produced, and the life of mine or the contracts that are in place for the product, logistics, the logistics path, who's going to develop the mine, environmental impact studies, status, and social community projects, project economics in terms of input parameters, OPEX and CAPEX, economic indicators, NPV, IRR and payback, and the project plan. The mining business plan is then just an expansion on the slides that I've presented to you, going into much more detail, but following the same structure. This constitutes then your marketing material which to take to the investor. The next chapter in the book is about raising mining capital. Raising mining capital follows a structured process and is the same for large capital raisings for mining projects as well as for small capital raisings. Process is the same, and I provide you, the reader, in this with the following pointers to raising mining capital. Practical, from the field, tried and tested. The different types of mining capital, from equity finance, farm and finance, listing, reverse listing, project finance, development finance, corporate bond financing, streaming, royalty and offtake finance, insurance-backed finance, contractor vendor finance, equipment finance, and disinvestment finance. Mining capital types for the different project development stages of exploration, feasibility, mine design, construction, and operation. How these different mining capital types are applicable for every project stage. Combining mining capital types such as debt and equity, or EPC and offtake finance. The process of due diligence on the project as well as due diligence on the investor. Structuring a data room easy for the investor to understand, where all the data is packaged in an investor-friendly manner. The 10 steps of raising mining capital, from the mining business case, the funding scope, selecting and approaching the investor presentation, the business plan and data room, the due diligence process, the investment decision, negotiation of the term sheet, the agreement, and then the investment. Term sheets, how they are structured for the different types of mining capital. The human dynamics and psychology behind and underlying negotiation of mining deals. The types of mining deals that are simply non-fundable and why they are non-fundable and how to rectify that. I conclude this chapter by providing a mining capital game plan. It's practical. It incorporates all the aspects of this book that can be used by any mine developer, mine owner, mineral policy decision maker, mining investor, for the purposes of financing mining projects, raising mining capital. It is applicable to any commodity and any project stage in mining. In the final chapter of the book, I present to you case studies. Case studies based on different types of mining transactions in different types of commodities. I unpack the case study in terms of the business case, the term sheet, and the transaction structure. The following cases are presented. Equity financing of a copper project to the value of 15 million. Farm financing of a gold project to the value of 2 million. The listing of a phosphate project for 2 million. The reverse listing of a diamond project to the value of 2 million. Project financing of a coal mine seeking $22 million. The development finance of a gold project seeking $10 million. Corporate bond financing of a titanium project to the value of $40 million. A streaming financing deal for a gold project to the value of $75 million. A royalty financing deal for a gold silver project to the value of $10 million. Offtake financing of a coal mine to the value of $10 million. Insurance rep financing of an anthracite mine to the value of $11 million. Contractor vendor financing a dolomite mine to the value of $7 million. Equipment financing for a mining contractor to the value of $1 million. And disinvestment financing of an iron ore mine to the value of $6 million. This concludes the summary of the book Mining Capital. I hope you enjoy the read. I believe it's very relevant for mining investment in Africa. If mine developers, if mine owners, and if mining investors and mineral policy makers apply the principles of my book. I believe it will be fostering investment to Africa. Enjoy the read. My contact details are below, and thank you very much for your attention.